Hello and welcome to the live financial modeling stream. Jason here from SmartHelping.com. We are doing the used car dealership today. It's going to have quite a lot of upgrades. This is one of the templates I built in the first, probably within the first 2 years of started modeling. And this is going to, we just got a lot of stuff to do here. I'm going to do some cool stuff with the inventory. Um, I'm going to add a revenue stream for fees. We're going to make the cost of goods sold, purchase schedule, cash flow, inventory, all that's going to be dynamic, and all show up through the three-statement model that we're going to add. So lots of stuff here. Don't forget to subscribe to the channel. Hit the notification button if you want to be notified when I do new videos and go live. Also, most importantly, check out smarthelping.com. And you can see here the template I'm updating now is part of the industry specific bundle, or you could buy it separately for $45. It's right here. So this is a template original. We'll be upgrading that, no increase to the price. Feel free to check out this. There's all kinds of stuff here: accounting tools, HR tools, joint venture, cash flow, waterfall, SaaS models. You can check out everything out at the financial models tab here. Lots and lots and lots of hard work going in all this, and right now we're spending time upgrading all of the startup models. So that's what we're going to be doing today and tomorrow. This will probably be a bigger one. I probably will go through to Wednesday at least. So let's get started. Let me do a quick sound check, make sure audio and visual is good. Test. Test. Okay, that's working. So we'll import from, let's see, we need to have something that has some inventory logic in it already, which I believe we did that for product as a service. So that was a SaaS one. Let's check that one out. I'm just trying to find the best base template to use to import into here. This is going to work. I'm going to have to build a matrix schedule for the inventory and stuff, but I can still use this most likely. Yeah, this had inventory logic in it. Okay, great. And a purchasing schedule. We're going to kind of do something like this, but it's going to be more of a matrix style. So you could define like how many, like you buy X round of cars in month one, and you can put in an input that says on average how many months does it take you to sell cars you buy. So there's going to be some layover there, which will affect cash flow, which is very important in the first 12 to 24 months. After that, it's not as important because it's just going to be like a rolling number, but it's definitely important for the first year or two. And it'll just say, based on your purchasing schedule, which we'll have in the revenue builder here, the amount of cars. Well, actually, we've just defined sales here. And then the cost of goods sold. We haven't really defined a purchasing schedule. In the current model, it assumes whatever you buy, you sell it in the same month. So huge upgrades to that. Now, before I get into all the logic, I just need to get as many tabs over here as possible with the new formatting and stuff that I've been doing with all these. So we got to rename the tabs first. Monthly detail, annual detail. This is not really relevant whatsoever anymore. This can be, and actually all these will be a darker shade. This can be terminal value tab, I guess. So that'll be all different. This is not going to be relevant whatsoever, but we'll use the tab for something else. This can be, how about distributions? I need to make sure all the tab names match the import. So distributions 1, okay, executive summary. This will be all updated too, but this can say is that visuals will be stay the same. Terminal value is going to be over here. I need to get a lighter color of yellow for all this. Bunch of new tabs we'll have to add. Change this to global control. Let's do this. So we'll do income statement, annual income statement, monthly. Switch those. Balance sheet, monthly. Balance sheet, annual. Man, there's going to be so much to this. It's going to be a huge, like this template's going to be so good after I finish this. It's just more robust, more comprehensive, much better at doing what it's designed to do and checking, pricing, feasibilities, cash flow. All this stuff's going to be really, really good. We want, so cap table we'll have in here. And cap tables can be very simple, they can be very complex, and you'll see the formatting I use for it. Basically, it can be as simple as a single owner just investing their own money, or it could be, multiple owners, employees, multiple insider investors, and also multiple outside investors, and in all their different share breakdowns and everything. So cap table, cap X, I'm not sure. So we're, hold on, let me finish this. Terminal value, that's going to be a yellow. With CapEx, normally I'll just have a generic CapEx which has, different fixed assets you can purchase. There'll be some depreciation over time. Some businesses will be applicable, some it won't. For like equipment rental, it's very, very material to the operations. Same with like a gym where you're buying equipment that's used over time. Um, Now with a used car dealership, you're buying inventory and selling it. I don't. We're gonna have to look here because I can't say I'm positive on how the cost of or if there's depreciation. Car inventory. I actually don't know. Do you? Right, right. Yep. Depreciation is slower. They have a better resale. Well, this is why. So used car dealerships, used cars have been the profit margins have been higher than actually new cars recently in the past couple of years. Here it's 2022. Can car dealership depreciate inventory as personal cars? Right, they do diminish in like if you have a car in the lot for 2 years, obviously it's going to go down in value. But are you actually making an accounting entry? Is what I'm trying to figure out. Let me put, do used car dealerships make depreciation accounting entries on their car inventory? Okay, proper accounting for demo. Just curious here if we're going to have to hook this into the CapEx schedule or not. From client service matters and beyond the better condition of well, there are many elements that play into overall task compliance and here, Sarah. Because usually you buy, let's say you buy some, let's say 10 used cars. You set them on the lot for 2 months. and then you sell them at a higher price. When you sell them, you recognize the cost of goods sold based on their cost, and you obviously have revenue. My question is, during those 2 months that they're on the lot, are you depreciating the value as an expense, or you just do the whole expense when it's sold? I don't demonstrator vehicles, which those should provide. Okay, don't care about that. Um, in order to be treated as a qualified demo vehicle. Okay, don't care about that. Right, so they're just saying here, like if you have test cars, those are like non-inventory cars that you might sell in the future. I'm assuming they're saying you can depreciate that as an expense. I don't care about that though. That's not what we're really. That's an outlier case. In addition to the vehicle meeting the above standards, the employee using the vehicle must be full-time. Da da da. Whatever. Ultimately, examiners still commonly find them. This should probably encourage adopting a lower of cost or market method for accounting for used vehicles. Dealerships that properly adopt the method for used vehicles may be able to write down the vehicle's ending inventory value. So they're saying if you never sell the car, you can just write it off based on the depreciable value. But is that saying like, so if I held the car for 2 months, I depreciate it for 2 months, that's an expense, and then when I go to sell it, my cost basis is whatever the initial cost was minus depreciation. Which I don't really know if it's going to be relevant to get there. We kind of just want to get to the cash flow, which is you buy cars, you hold them for a while, and then you sell them after a few months for more than you bought them for. And that's just cash flow. Cash out, cash in. And it's really only relevant for obviously taxes, which we are going to have in here, but um, I don't think we need to put this on a CapEx schedule. That'd be way too cumbersome. We'll have a CapEx schedule for like things like this, like a demo vehicle or whatever. But it's not going to be for the primary inventory that's being sold to make money. Like that's not going to go into the CapEx schedule. It'll go into the purchasing schedule, which we got to build. But are it's done on a vehicle by vehicle basis. All right, so that didn't really help a lot, but we kind of know what we're going to do because it wasn't clear. So it's not going in the CapEx. We're just going to show it as the cost of goods sold whenever it's sold. So that's fine. What else do we have to update here? That schedule. Put this over here. Validation. Be called validation 1. Also, I want the months need to be in column 1. So I don't know why I decided to do car types in validation. We can just literally have them be entered here. This is not even relevant. And then we can do blocks here. Oh, we're going to do some formatting on this, so I don't want to do too much yet. But this will be editable. Okay, global control. This is fine. These are the base logics that's going into here. Also, this will be referencing this. Okay. darken these tabs. Normally on day one, I kind of just do importing and stuff, but there's so much going on with this one, so I don't know. We're probably going to do a little bit more. Put these in front. What else am I missing? Inventory one. I don't know actually if I'll use that though. Probably have to do our own logic. What else? Startup costs, which these would be like initial legal fees, anything that's like tax deductible, not purchasing of car inventory. That's gonna go here, but this will then be updated with the new logic, so it's fine. So we got global control, unit costs, debt schedule, capex, cap tables, all of this, distributions. Okay, I think we got everything. So that's good. This will all be new. Remove these images. This all new. Okay. Let's import. So we'll just go left to right here. So global control. Make sure, yeah, this has just the standard stuff that I have. We don't need this. The operations will be based on the purchasing schedule of cars, not this, but that's fine. So here's our inputs. We also need to do capex. And I'm just really right now trying to do a shell and get everything in, and then we're gonna do all the referencing and everything. Cap table. Now, the terminal value is going to be very interesting with this one. We'll probably have to do something with the inventory. But for now, we can keep the base valuation formatting until we get there. This, again, I don't know. We might roll up into this inventory logic, but we got to do more granular stuff that's more advanced once we get down into it. All right. Did we get everything? Let's update. Yeah, update all this stuff. I'll zoom in here. Okay. Let's get the income statement, balance sheet, cash flow statement. monthly, annual. Now you'll note, this might not seem that exciting, but if you're doing it, what I'm doing is more complicated than it probably looks. If you had to do this from scratch or just start figuring out what basically someone said, okay, add this, this, and this, and make this template have all these features. Um, it can be very daunting to get done, especially with the three-statement modeling and all this. But I've got for the purpose of me doing, I've got a pretty good process. But still, it always takes time. It's always a puzzle, and every business is always a little bit different. I do like to I like to upgrade the older templates because there's just so much cool stuff that can be added. So I'm excited to get this upgrade done. I'll probably be doing this for at least a year. Um, but as you've seen, I've been trying to do like one or two tab financial calculators that I feel like are useful in between doing these upgrades, so I'm putting out some new stuff as well. And last week we got a volume discount sensitivity template, which turned out great. And you can obviously check that out on the site and on the videos from last week. But that turned out really, really good. So I'll try to do some more of that. This week I was going to do something with quota versus actual, and something with gross profit revenues for like basically would be more for like construction jobs or installation jobs, but I'm not sure. We'll see how that goes. We don't need this. Let's put in this executive summary. And distributions, and then we're done with the importing. Okay, so that's probably about all we're going to use this for. So don't save that. No. All right. Let's start trying to fix and format things that are broken. Oh, actually, first we got. So here's the cool thing. Now we do a find and replace. So we just put in a bunch of logic in tabs from that template, and we need to remove the reference. So we do replace all on the workbook. We pray that it works. Nice. 13,000 replacements. Okay, so now I have no more references to other workbooks. That's good. It's all now contained in this new build. Let's save this as V2. All right, we'll format now. So we want to do all light lines, number one. And light yellow with blue text. For all inputs. Now this schedule, I don't know how this might change, but I don't know yet, so we're just going to put it here. Remember, you can hold control and then click and do a bunch of stuff at once. Oops, I forgot to do the grid lines. Okay. there's a lot to do here, but for now we're just going to format the columns and whoops, 15. Remove grid lines. Yeah, that's fine for now. Oh, come back here. Like I said, this will not be for cars. This is just for other stuff that can be depreciated outside, like a building, you know, computers, equipment. Um, okay, that's good. Let's update. So financing is going to be here. First payment date is an input based on this. Let's update that to start month. Wow, a lot of updates on this here. So this, come on. And it'll go to there. Re-reference that. Payments per year. Okay, so all of this is going to be entered. Say 30-year loan, 5%, 12. And then this has to be actually 12 divided by that. I believe that's the right formula. So if we did 2 payments a year, perfect. If we did 6, 1, 2, 3, 4, 5, okay, good. That's working. All right. Also, let's add this logic. So if our exit terminal value is going to be included, if this equals yes, then we want to pay off this loan on that month. So pick the end month. Otherwise, just run it out. Drag this down. And then this formula will be, let me grab it from here. The more I can copy and paste, the less likely there are for errors and issues down the road. So I like to do that as much as possible. Okay. This is just checking if it matches the date. If so, pay off, otherwise don't. Perfect. Okay. That's good. Terminal value, we'll have to do a bunch of stuff there. Inventory, we'll have to do a whole bunch of stuff. Startup costs, we can update the formatting. We'll do formatting here. Yeah, the biggest updates are definitely going to be with how inventory works and a delay on, how many months on average inventory lasts for, and we can vary that. I believe it would make sense to vary that by car type because some cars might move faster, some might move slower. So I'll try to make that dynamic. We're gonna have to do a matrix schedule. That's gonna be the most complicated thing to add, and then like after we do that, it'll just be a matter of referencing everything. Okay, this is good. Alrighty. Let's do this. Okay, our dates are looking good. That's great. We'll put some validation on these. All right. I mean, I think we're ready to start um, building some logic. Oh, I got someone coming to fix the mailbox today. Alrighty. So the first thing we need to think about is the purchasing schedule, which is going to drive everything else, and we got to do a matrix on that. So we've got our month of when each one starts having things being purchased. Here we have actually sales, so we're going to update this. This is cars purchased per month. And average sale price is just based on a markup here on cost, which is fine. You can put the cost in here of each car type, and then based on this markup, this shows your average sale price. I'm also going to add in here I don't know if I need to make it dynamic. Hopefully I'm not doing VLOOKUPs. Let me go to the monthly detail. Oh, yeah, VLOOKUPs. Okay. So that means we kind of got to add this over here because I don't want to mess that logic up. So we're just gonna, it's fine though. So we'll put over here, we'll put average other fee revenue and it's add a percentage of total of sale price. Okay, so this is going to be another revenue stream that we'll have. And it might be you're just trying to work with some average number. It's not going to be exact, but we know that even used cars dealers may have some kind of other revenue that they make on top of the sale, and that could be it's basically here going to be measured as a percentage of the sale price. And we'll just put it like 2%. And then you can see the amount here if you want. Amount per car is just that. And that'll be variable based on the markup changes and your costs. All right, so that's good. Let's give this a thick bottom border. All right, so we got this schedule. We're going to say cars purchased per month. X. Let's put like 5. Let's just put 6. I just want a variation here so I can check on the logic. We'll try to make it realistic. So the cheaper cars we'll buy more of, the more expensive we'll charge less of. This will note when you fill this out, everything is arbitrary. So my inputs are just to make sure logic works. You will actually do research and figure out for your used car dealership what the market looks like. What are your average markups? What are your average what kind of cars are you selling? There's up to, we've basically got 20 unique types, low, mid, high-end cars, and those will all have different variations for markups when you start to sell them, what their costs are, how many you're buying a month, all of that. So we've got this schedule here. We'll add one to that. I mean, that's a lot of cars, but this is just arbitrary. I need numbers to check the logic. So you buy this in year one, 24 a month. Now I guess we do the revenue matrix. So matrix, we're going to have months going out. We're going to have a whole bunch of these things. I don't see any other way to do it besides using this. So it's very advanced logic, but very necessary. We'll have timeline on the top. Okay, and then so we can have date and year, because this all has to be on the same timeline as everything else so we can reference it correctly. All right, so the first matrix is going to be called purchased per month. And every month is its own cohort. So what we do is say, okay, if this equals, oh, hold on. Hold on. Let's see. Let's think about this. How is this going to work? Because I'd have to do a matrix for all 20 or not, yeah, 20. Shoot. That's not easy. Oh, let's think. Is there any easier way to do this? I would like to do one row per car type if I can. Well, so let's start off. So here's the cars purchased. This is now purchased per month. So I've got these rows. I can reference that. Make this gray. So type 1. So this is actually um, cohort 1 or car type 1, which is just equal to this. And I know this logic already exists. So like there's car type 1, 2, let's just do like 3 of them and see how this works. So I know this is a timeline, how many are bought each month. That all makes sense. Now the question is, how do we do, because I can't do one cohort like 1 month and show this 24 and next month show how this 24 sells and next month how this 24 sells. But we need some logic to show like here's what you're buying and then we need to see when those cars sell. And we're assuming why is that NA? I don't know. I'll figure that out later. Uh, we're assuming all the cars you buy are sold by end month. It'd probably be better to say, okay, you buy 24 cars, you sell 10% of those in month one, or after a month has gone by. So technically, in the life cycle, month one or month two, you sell 10%. Month three, maybe you sell 50% of them, etc. And it has to equal 100%. That would make the most sense. Um, but it's going to be harder. The easier way would just say, okay, how many months does it take? If I put 3 in, then on month one, two, three, these 24 that were bought are going to be sold. But in reality, you probably would sell some in month one, two, etc. So we have to do a matrix down here. We'll do, so sales cycle per type, I guess. Sales cycle per car type. And we have our 20 car types here. And we say, okay, one, we'll do like up to like 12. I mean, on average, you know what? We could do 6. We could do 24. So in theory, you could have up to 24 months. It's very unlikely that it goes that long with this stuff. But I mean, if you sell really high end cars, you don't have a lot of volume, then this is going to let you assume on average. Um, how many months does it take to fully sell all the cars you buy in a given month? Let's just tighten this up here. And so, like I said, normally we don't do all this stuff in the first stream of the week, but I got to do all this before we can even start trying to do three-statement integration and all this other stuff. Like this is priority, so got to do this first. Actually, let's go across the top. Transpose. Oh, dang it. All right, we gotta do this manually. So we'll let the user put in the percentages going downwards. That'll be a lot easier, and we can actually do even higher month cycles if we need. Okay, so you can go in here and put for car type 1, oh no, this is 1, 2, we could do like 36 months. And you could put in the percentage of cars bought in months. How long does it take to sell your cars? So let's say after 1 month you've sold 25% of whatever you purchased, another 25, 75, and then let's say 20 and 5. And we'll say for 2, let's say it's like 50, 50. The point is this always has to equal 100%. Well, I guess it doesn't, so we'll just put a total here. If you think you'll not sell all the cars you buy, then oh, then that's fine. You just don't sell them all, so your revenues will be lower. Um, we're gonna call this sales cycle estimator of initial purchase month. How many cars are sold? How long does it take to sell all the cars purchased? I feel like this is kind of like in my head it makes very good sense. Like you're just saying it takes me in month 1 I sell 25% of the cars I buy. Or if you put here 25 for all 4, in theory it just says, okay, on average it takes me 4 months to sell a car. On average. But you might sell that car in month 2 or 3 or 1. And so to average it out, you say, well, technically in month 1, 25% of the cars, month 2, etc. And by month 4, you will have sold all the cars you bought for that type. All right, so this be 0. Let's change these numbers a little bit. 35, 15. And this curve could be anything for each type. Again, it's going to be based on what the cars are like, but I think this is really, really good logic. It's going to make this hard though. This is going to be hard. Um, so let's think. We have this matrix. We need to say, all right, these are bought here. Of this, I mean, now with this whole percentage thing, I don't know. We're going to have to do a matrix for every single car type. So the question is, for this granularity, do we sacrifice the count, do we make this like 10? I feel like I could do it for 10, but it's still going to be pretty cumbersome. And is there any other quick way to make sense, like to do this? Because all I have, here's my information I have. I bought 24 cars in month one. I look at this and say 40% of those cars, those 24 cars, are sold within 1 month. And by 1 month, we just will offset everything by one. So that essentially says all your cash to purchase these things happens in month N, and then your first, this 40% applies to N plus one. So by 24, we sell 40% in month two in this case, another month three, four. So that can't be including multiple months of cohorts. It has to be separate. What do we do? What do we do here? I mean, the easy answer is we just go, we just do this. And this is all only month 24 cars purchased. Month two is only 25, which and we do that 20 different times. I mean, that's a lot. That's a lot. So I think to make this model usable with that nice granularity, we're going to have to cut the car types down to like 5. So you've got like your cars that average around, you can have 5 different ranges, and all those will vary based on how long it takes you to sell them, their cost, their margin, how many you're buying per month, but there's just 5. I mean, maybe, do we do 9? 10? 10 might be reasonable. It's just going to take me a lot of work to do. I feel like 5 is just not enough to do an average that's granular enough. So I think literally we have to, 10 is like the bare minimum. So if we do 10, this is no longer relevant. We'll do 10 different matrix tabs. And each of those tabs will have all the logic for all of this stuff. We don't need these. I feel like 10 is like you can fit like trucks, cars, SUVs, SUVs, other, and then you could do a high end of those, a low end of those, and then 2 other just miscellaneous types, and you just have average prices. Or if you focus on a certain type of car, you can have, granulate that down into 10 different, like, or if you just do cars, you can have 10 different types of cars or whatever. There's going to have to be some estimating, but either way that's going to have to happen no matter what. It's just, so 10, I feel like is the minimum we can do that's still effective, but it's not too much for the matrix logic. And 20, I believe, is too much. It's just too much. So we'll do 10. So now it's just going to be, yep, delete that. This all gets cut down by 10. It's just the amount of improvement we get with all that nice logic is so much more valuable than just having 20 things that can do the logic like this. Having 10 that can do the logic in this new way is just so much better. It's more accurate. It's just more material in what we actually get as a forecast, so we have to do it. Okay, perfect. So I have my counts here. what I'll do now is on the matrix tab, we'll go simply if this equals this, pull this number, otherwise 0. And now that's going to be based on this purchase schedule here. We're going to call this purchases. So you get your start month, your markup. We can put in average cost and just reference this so you can see it on the same tab. Okay. Oh, dang it. Nope. I messed all this up. Hold on. Okay. You got the type, average sale price based on the markup from this cost. Honestly, we probably should just have that there. This is no longer relevant. Yeah, I don't think we need this here anymore. I'm just gonna go cut and paste. Now let's base rate on there. Okay, good. Yeah, now we don't need this. We're working through one thing at a time. So average cost per car. Car type, average sale price, markup. I mean, I guess we can move these around. All right, so cost, type, markup, sale price, start month, when you start purchasing. Now this is Feb 2022. What is going on here? This should be January. A1. Okay. This needs to be A1. That's why we had an error on the last month. Okay. A1. All right, so start month of purchase. I need a note there. And this could be all the same month for all these or staggered, however you have it, and then you'll start purchasing this amount per month. That cost will then populate based on, so this, yeah, so month 2 is going to be here, month 3 is going to be here, all for cohort car type 1, and then this will go up based on how you change this. So 28 is the end. You can see there 28 cars. So I've got a reference here. I need to do next is, so that's that. This is going to be age. So age is just going to be how long the car's been on the lot for. And then that way we can reference this age on lot in months. And how much, so sales cycle per car type estimator of initial purchase month, how long does it take to sell the cars purchased in a given month? We'll just start with this. How long does it take to sell all the cars purchased in a given month for a given car type? So in month 1, you sell 40. Month 2, you sell 35. Month 4, 10. So now we go here and we do our count formula. So if this is greater than 0, and then we do that again here, but we say also if this is greater than 0, then do this plus 1. And now we're counting. So nothing in month 1 core, we don't start till Feb, so Feb count 1, 2, 3. Now we have month count, and we can reference that to get our percentage. And then all we have to do is duplicate this matrix 9 other times and change the reference to each of these. And go down the line on the monthly detail. Now I really want to make sure we have all the data we're going to need in a matrix before I start duplicating. So we got age, definitely obviously need that, that's a big one. We are going to need percentage sold. So here we do a lookup, index, and I want to figure out the purchases here based on matching the age, and we're offsetting, remember? So this one won't start selling, month 1 won't be till the following. So we go, let's see, this -1, comma, purchase schedule that, and that should give us what we want. I believe. So index, so that's locked. Matrix B67 is not locked. This is locked. And then it's a 0, it's not in there, that's fine. If error, just return 0. This is a percentage. So now, look at that, 40, 35, 15, 10. So now we have a dynamic percentage range for each of these, which is just based on this, whatever's in here for car type 1. And now you're starting to see why this is the only way that, like, I have to do 10 separate matrices tabs for each car type, or else there's no way to accurately do it. So I got this nice schedule here. I can reference this. Percentage sold, age. And then we take, now watch this. We go amount sold, and that's just going to be this amount times the max of this. And I'm trying to be as efficient as possible because I got to do this 10 different times, and we don't want the thing to be too heavy. So I might do total revenue, like, I don't know, it's not that much. we'll see how it goes. I might condense that down. So 10, 8, 4, 2, and that equals 24 total. 24, if we go down here to for the year, now we're at 25. If we go down to the bottom, it should be at like 28. Yep. Okay, so that's all working great. So that's the amount sold. And you can see here, watch this now. You could do total sold per month. I don't need to write that. You just sum up the bottom. And based on all that staggering logic, we can see for car type 1, how many are we selling per month? And you see that gets up to 24 once we've got past the first 4 months, which makes sense. But then we get into year 2, 3, 4, that starts to go up. Now we're at 28. So like I said, this is more important for the first year or two, depending on how often when you start selling things, but this is the only way to do it accurately with all this, all the levers and everything else. So there you go. Amount sold, dollars sold. So this is actually how we're going to do our inventory. Now all these have the same price, so we can just take this. Actually, yeah, that's right. We don't need a matrix for this. We might. I don't know. We might. So I'll just do it this way. So this times, and then the cost or the price we're doing these for is here. I'll also have to do a cost matrix for the right cost of goods sold. Yeah, we'll probably have to do this way. So here's my revenue for each monthly cohort. So you can see up here, we start selling them after the month of purchase. We buy in Feb, we start selling here, 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 and here for $24,000, which makes sense if these are $1,000 each and there's 24 of them. If the cost is 500. Now, I'm assuming I'll probably have to figure out the cost as well. Go one down. So this is where things get real complicated, because since we're doing it like this, 40, 35, 12, 10, we've got inventory being purchased, which increases the total inventory. We've got inventory being sold, which decreases it. But these are happening over time and across different car types. So we're going to have to track, let's see. I'm hoping I can aggregate this at least by car type, but I don't know. So this would be inventory depleting in this month. This is inventory depletion. This is the unit going out, which we don't care about that much. And then this would be the inventory going up. So here, I think this is the last one I got to do. Wait, I already have one here. Purchases. So this is purchases, which I should be able to just simply do, since you're only doing one a month of each type, this times the cost. And then, so there's my cost, but, which is going to be important for cash flow. So we have this cost for each one. Oh, what did I not lock? I gotta lock this. So there's my total cost. Here's my sales. My cost of goods sold has to be related to that sold. So let's see. Cost of goods sold would then be the amount sold. Okay, good, 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 good. So I did have to have this amount sold logic happening. That's great. So that times the cost per unit here. And I think I'm good. So there's my cost of goods sold per month. And then the difference between all that is going to all balance out on the balance sheet and cash flow. Okay. So now I have, cost of goods sold for those sold, 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 sold. Revenue is here. Total purchases here. We can just purchases. Oh, okay. And then cost of goods sold. So cost of goods sold reduces inventory, purchases increases it. Dollars sold is revenue. So when I sell something, revenue, the purchase amount is going to be going down as this goes down. So purchase increases inventory, cost of goods sold decreases it. And then leftover is going to be revenue. And then we'll have fee revenue is not going to involve all this kind of craziness. All right. Well, good news is the good news is holy crap, it's already 11:13. I got a lot of stuff to do today. Um, we got this logic down. Now all I have to do is duplicate this 9 other times. It'll be easier to duplicate, and then we'll have all the information needed to then make this make sense in all these different financial statements. And I think this is very, very good, especially in the first 12 to 24 months, which this is a startup model, or if you're starting it, you wanted to figure out what cash flow looks like and how much you're going to need to come up with to buy the inventory, and then as you sell it, like what does everything look like? So I think this is really good that it's done like this. And it's especially important if you have very long sales cycles on cars. But even if you don't, I mean, you're probably going to have, I mean, I don't know what's the average, probably 4 to 8 months, I guess. And you could plan for that to be different and do different sensitivities to plan out like worst case, best case scenarios. All right. Well, tomorrow we're going to keep doing this. We have to finish all 9 of these. Once those are done, we can actually start on making the income statement inventory calculations. Um, I don't need this inventory tab, but we'll leave it there for now. I don't want to delete anything yet. So let's save this. I'm going to go. Don't forget to check out smarthelping.com. Um, subscribe, hit the bell for notifications, and I'll be here tomorrow. We're going to keep grinding on this used cars dealership till it's done.